It's not uncommon on Tuesday following an extended holiday weekend for the bond market and mortgage rates to open up with a bit of weakness. It could be that we're playing catch up to some global headlines, or in this week's case, that we are dealing with a large influx of corporate bond issuance. Now, you might say, why do mortgage rates care about corporate bonds? Keep in mind that rates are based on supply and demand of longer term bonds, specifically mortgage backed securities. So, anytime you have a large influx of corporate bonds that are going to hit the market, you want to decrease the price of your bond to be more attractive to investors. Well, when you decrease the price, you have to increase the yield, and rate corresponds to yield. So it's very common when you have this kind of situation with a lot of corporate bonds that are being issued to see weakness across rates. And exactly what we saw on Tuesday. Now, on Wednesday, rates unfortunately hit their highest levels of the week following some higher than expected ISM servicing data, indication of economic expansion, not at all what the Fed or the markets want to see. Now, we saw a nice rebound on Thursday, though, even though there was some lower than expected jobless claim reading, not a good indication for the labor market. Rates did rebound on Thursday and kind of held those improvements through the week's close. So definitely a good sign. Now, the markets are waiting on Wednesday, this Wednesday, the 12th, CPI, Consumer Price Index, the market's favorite inflation metric. Will it confirm that inflation is continuing to trend lower, closer to the Fed's 2% target? So that report is extremely important. Now, keep in mind the next day on Thursday is retail sales. This is a gauge of consumer spending and demand. Remember, the Fed has been increasing their short-term benchmark rate. They've been enacting this tight monetary policy in an effort to slow the economy, to push down demand, and in doing so, to help push down prices, which would ease inflation. So those two reports are very important and will hopefully provide justification for a meaningful shift across mortgage rates. You have any questions about these headlines, about these changing rate trends, or if you want to talk about how they impact you and your purchase power, definitely give me a call. Love to talk to you. All right. Have a great week.